Good afternoon. Thanks for tuning in. You're watching Ask BQ on Bloomberg Quint Live, and I'm Navneet Saluja D'Souza. Well, if you've got any questions related to equity markets, this show is just perfect for you. Send them to us on Twitter, Facebook, YouTube, and WhatsApp. In fact, you can also call us now on 022-4540-4141. Mail us at askbq@bloombergquint.com with all your financial queries, and we'll try and address them on the show today. But make sure to add the AskBQ hashtag. All right, before we get to the individual queries on the show and introduce our guest, first, just let's do a check with what's happening to the markets. Finally, some respite after the fall that we've seen in the last three trading sessions. Nifty currently, I guess it's almost trading at day's high level. If you could just pull up those indices there on the screen. Nifty bounced back quite sharply from its 100-day moving average in yesterday's session. Bank Nifty is doing well ahead of the monetary policy. And look at that, what's contributing to the gains. Nifty PSU Banking Index. That's the top sectoral gainer as we speak. That's sitting with gains of almost 2%. But talking about the frontline stocks, Nifty is up almost 68 points. Let's pull up the contributors list and check which are the stocks that are contributing to the gains in today's trading session. We've seen a whole host of companies doing well, but let's just pull up the contributors list. Infi, Reliance, L&T, and SBI, all of them are your heavyweights which are contributing. And on the losing side, the biggest heavyweight, HDFC Bank, has seen some bit of tepid trade coming about. Asian Paints, Tech Mahindra, and HPCL are the ones which are showing some bit of red ticks. Let's pull up the broader markets. They've been in focus in the last few days. In fact, today the broader market indices, the mid-cap as well as the small-cap index, they've snapped the 6-day losing streak. So finally, some respite for the small-cap and mid-cap stocks. The mid-cap index is up by 0.8%. Small-cap is up almost over 1% in trade. But pull up the advanced decline. I guess that gives you a better picture of the broader market universe of all the listed stocks. It's almost 2:1, so good going for market breadth as well. All the sectoral indices trade in the positive territory, but let's get you some stocks which are in focus today. IDFC Bank as well as Capital First are up in trade on back of that RBI nod they got with regard to the merger. So IDFC Bank is also your top F&O gainer for the day. Capital First is sitting with gains of almost 5.5%. There were a lot of stocks from the broader markets which were correcting in the last few days. So let's just pull up yesterday's losers which are gaining in trade today and gaining quite sharply. Stocks like Thirumalai Chemical, that's seen double-digit gain in today's session. You've also got the other chemical stock, Sri Pushkar, that's sitting with gains of about 8%. Avanti Feeds and Simplex Infra, which didn't have a good start. The stock actually touched 52-week low, but now it's seen gains of almost 13% from the lower levels of the day. On the losing side, Manpasan and Quality, they continue to be locked in lower circuit of 5%, so that's down 5% each. And NCC, that's down almost 4%, and that's also your top sectoral loser for the day. So that's about the markets. If you could just pull up the turnover, number as of now, how much participation we've seen, we'll get a clear picture. Remember, the turnover in the start of the June series so far has been on the higher side. So I think it's right now a little bit lower. Remember, traders will be cautious ahead of the monetary policy. Almost 3 lakh crore of turnover has been recorded so far. Okay, then let's get in our two experts of the day then. Sameet Chavan of Angel Broking and Mr. G. Chokkalingam of Equinomics Research and Advisory are here with us to address your queries. Welcome to the show, gentlemen, and appreciate you joining us today on this show. I'm going to take Sanjeev Agarwal's query first. He's written to us on YouTube. He's bought 3,000 shares of JK Lakshmi Cement at a price of 380 rupees per share with a long-term perspective, and he wants to know what to do with that investment. So 380 is the buy price. Let's just pull up the stock and see where JK Lakshmi Cement has been trading right now. 334. All right, so bit of losses there. Mr. Chokkalingam, what would you advise if he has a long-term view of, let's say, 2 to 3 years?
He can hold on to it. In case it goes close to 300, he can even add to average it down. I am not advising him to average it down now because after the fall also it is still trading at around 35p on 1 year forward earning. The only positive trigger is that in terms of enterprise value per ton of cement, it is one of the cheapest. So in case there is any consolidation and then this can give you very good return. But otherwise, I would ask him to just hold and average only around 300.
Okay, so hold on to your investment, Sanjeev. And if you wish to average, probably you can wait for the correction around the mark of 300. Then you can look to add more. And we've already got a lot of queries. Thanks a lot for tuning in and writing in your queries to us. I'm just going to go across to a couple of queries on YouTube right now. Raman Singh is asking, is it advisable to buy Sterlite Tech, an Indian hotel, at the current market price? I'm going to take this question to Sameet. Sameet, on the charts, would you advise somebody to buy into Sterlite Tech or Indian hotel?
See, I'll avoid Sterlite Technology at current juncture. It has been consolidating of late, but if I look at the overall structure on daily chart, yesterday there was a breakdown below its important support level of 300, and that particular level coincided with 200-day moving average as well. So with a near-term view, we would expect continuation of this corrective move, wherein the stock can head toward 240. But if the stock reaches say 240, 235, that would be an opportunity to go long. As far as Indian Hotel is concerned, clearly this stock has been consolidating. So if I want to go long, I would rather wait for a dip to happen towards 120, 125, or if the stock first gives a breakout beyond 148, that would be an opportunity to go long.
Okay, that's the view on Sterlite Tech as well as Indian hotels. On Facebook, we've got a query coming in from Karthik Mahadevan. He's written to us from Bangalore. Thanks a lot, Karthik, for watching our show and writing in your query. He's holding 300 shares of Symphony at 170, and he's been holding the shares since 2013. He's also mentioned he sold about 50 out of the lot at 2100, and he wants to know whether to keep holding since it has fallen from 2200 to 1400 rupees. Mr. Chokkalingam, Symphony has been an outperformer, and I guess the recent correction is on the back of the correction that one has seen for the entire broader market universe. But somebody who's been holding since 2013, what would you advise them to do?
I mean, if he can book loss, he can book loss also, because
he's not making losses. Okay, I think his buy price would be 1700. I'm not too sure.
Yeah.
Maybe then he's making losses. Yeah.
Even if profit, one can sell it, a profit or loss, because normally these kind of businesses, they have a poor performance during monsoon period and winter period, and
seasonally not a good quarter for them.
So, and also the result was not up to expectation, so there can be more pressure for the stock. So therefore I would suggest sell on the stock.
Okay, if you're making money, take money off the table is what Mr. Chokkalingam is advising. And Karthik, I'm not too sure what's your buy price. In 2013, I'm not too sure what was the price of Symphony. But if you've purchased at 1700 rupees, Mr. Chokkalingam still suggests you should book your losses. Okay, let's take our next query from YouTube then. Nikhil, one of our regular viewers, has written a query to us. He's asking if this is the right time to buy into Voltas. Let's just pull up the stock price and see what's that doing. If possible, if you could just pull up the last 7-day chart, it may give you a better picture, because we've seen stock correction coming by. Voltas is sitting with losses of almost 1%, and in the last 7 days, look at that, it's corrected nearly 8%. Sameet, is it a good level to make a fresh entry?
Yes, as a medium-term trader, yes, certainly looks good. Around 510, 505, it seems to be a very strong support on weekly chart. There are multiple indicators that are coinciding around 510, 505. So, as a medium-term trader, yes, it's a good opportunity. Any dip from current level, probably towards 500, 495, would make it a good risk to reward ratio. So, one can go long in a staggered manner, starting buying from current level.
Okay, so one can look to buy into Voltas at current levels. The stock's corrected in the last 1 week, and also in the last 3 months, it's down almost 17 to 18%. Well, we've got a caller online. Mr. P.S. Krishnan calls us from Chennai. Hi, Mr. Krishnan. Good afternoon to you, and thanks a ton for calling us. Tell us what's your query on.
Thanks, Navneet. Thanks for connecting me in. I have queries on two specific stocks. One is Engineers India Limited. Second is Bharti Infratel. I'm looking at a short-term trade between 4 to 6 weeks time frame.
Okay.
Given that both the stocks have fallen quite significantly in the last few weeks.
Mr. Krishnan, you have a query on Engineers India and Bharti Infratel, right?
Yes, that's right.
And you're looking to make a fresh entry to make a it's a short-term trade is what you've mentioned.
It's a short-term trade between 4 to 6 weeks time frame is what I'm looking at.
You've not taken any position so far?
No, I have not taken any position so far, no.
Okay. All right, Sameet, I'll come to you then. Would you suggest taking a fresh position from a short-term point of view into stocks like Engineers India or, for that matter, Bharti Infratel?
See, as far as Engineers India is concerned, this stock has been correcting quite sharply in last 2 to 3 months. However, it has now reached its major support level, which is around 125, 126. But since recently we saw massive underperformance from the mid-cap counters, they have been correcting quite sharply. So I would rather wait for some kind of reversal. In case of Engineers India, the reversal would be somewhere around 136. So once this stock surpasses 136, your short-term bottom would be in place, and then you can keep a stop loss around 126 and can expect a decent move towards 155, 160. As far as Bharti Infratel is concerned, this stock has been correcting quite sharply. However, I would avoid trading in this particular counter as of now. Although it is trading around its major supports of 290, I would rather wait for some kind of trend reversal to happen on this particular counter.
Okay, so avoid Bharti Infratel is what Sameet is advising, and wait for some reversal in Engineers India, Mr. Krishnan. Hope we got your query answered. Let's move on and take our next query from Vishwesh Iyer, who writes to us on YouTube. And interesting stocks, Mr. Chokkalingam, Rain Industry and Dilip Bilkon, which have been correcting because of the additional surveillance measures which have been announced. And also for Dilip Bilkon, we know the reasons with regard to rumors that were spreading in the market with regard to auditors resigning. Tell me one thing, he's saying he's got a long-term horizon. He's willing to hold on for 10 years. I know there's a correction that has come in for both these stocks, but fundamentally, has anything happened in these stocks? If one were to look at fresh entry for the next 10 years, would you advise them to make so?
Look, one should not have a blind faith of investing for 10 years. Even the fundamentals change dramatically. Okay. So it's good to have that kind of perspective, but one has to monitor on a quarterly basis. Now, if Dilip Bilkon rebounds to some extent 5-10%, he can exit the stock. Because if you look at the balance sheet, standalone and consolidated, and see the difference, it's quite a little scary, because the difference of standalone and consolidated revenues around 200 crore.
So you're not advising a fresh buy at all?
No, certainly not. I would even sell. Because the subsidiaries account for 200 crore of additional revenue, but they have taken the ownership for close to 2,000 crore of debt, and they have made a 72 crore loss. So the standalone, the picture looks very rosy, but when you look at the difference between consolidated and standalone, it gives me a lot of fear. So I would sell Dilip Bilkon. Okay,
quite surprisingly, but most of the brokerages, they continue to be bullish on Dilip Bilkon. What about Rain Industry?
See, I always believe, the retail investor should be well in advance to chase a theme.
Sure.
So it is too late.
It's too late. I totally agree.
I would not buy.
Stocks like Rain, HEG, Graphite.
It's all cyclical businesses, and this cyclical nature doesn't last for long. So you have to play very carefully these cycles. So I would not advise him to buy. Rather, if there is any rebound, he should sell Rain Industry as well.
Okay, and well, you never know when the cycle turns for these stocks. So Rain Industries, look at that, in the last 3 months, it's down almost 40%. So Mr. Chokkalingam is advising stay away from stocks like Rain Industries as well as Dilip Bilkon. Okay, the next query is on Everest Industries. Amar writes to us on YouTube. He wants to buy the stock with a 6 to 8 month perspective. He wants a fundamental view on this one. Okay, so it's a short-term horizon, but he wants a fundamental view. Mr. Chokkalingam, do you track Everest Industries?
I used to track. I have not looked at fundamentals. I am trying my best to see now. It's one thing I can tell you, that the management is good, balance sheet is decent, and also the business model of building product is very good, because we are seeing, even this morning we saw the media report of 75 affordable housing companies, being set up. And it is good for building product companies like Everest Industry, because there will be a lot of demand for building products. So the stock is also corrected a lot. So around this level of 413, he can slowly start buying for a long-term perspective.
Okay, so that's the view on Everest. In the last 3 months, this too has corrected nearly 20% in trade. Well, the next question comes in on Avanti Feeds. Vamsi Bitala says, is it the right time to average the stock? And we know Avanti Feeds has been correcting in the recent past, but I guess today it's rebounded. It's up 11% in trade. Vamsi is holding 25 shares at 2,400. Okay, that's a very, very high entry level, Vamsi. But Sameet, do you think the stock can be averaged if somebody is bought around 2,400? It's currently quoting at 1,500. The last few days were quite turbulent for this one, but some bit of bounce back seen in today's trade.
See, since it has corrected quite sharply, more than 50% in last 3 to 4 weeks, so there's a possibility of some kind of breather or relief rally. We have already seen Nifty Mid Cap Index trading around its multiple support zone, and from there the possibility of some kind of relief is quite high. But I'm not sure in case of Avanti Fed whether this the particular stock has bottomed out or not. It would be too early to take that call. So yes, there could be a possibility of some kind of relief rally toward 1900, 2000. But if you have a medium to long term view, this is probably not the right time to average it out.
Okay, technically it may not be the right time to average this stock, but I think one more query on Facebook. Ramaldeep is asking, he's holding Avanti Feeds at 2100 and he wants a long-term view. What would you suggest, Mr. Chokkalingam? Is this also an avoid?
I mean, today it has gone up by 10-11%. Yeah. So I would suggest him to wait for this 10-11% correction to average, because this is a commodity business and it doesn't deserve a double-digit PE. And also in the long term, these kind of business always get into two problems. One, the disease impacting aqua business, and second, the regulatory issues in exports. So that's what spoiled in the last 2.5 decades this kind of businesses. So therefore, he should wait, and if there is a 10% correction, then he can think of averaging it down.
Okay, so if it corrects by another 10% from the current levels, probably one can look to average who bought around higher levels of 24 or for that matter 2500. Karthik has written to us. He has a query on Biocon. He shorted the Biocon futures, I believe, at a price of 610. If possible, let's just pull up the future plate there. Remember yesterday, after touching 52-week high, when the company got US FDA approval to jointly manufacture one of the cancer drug, it did touch 52-week high, but it corrected quite sharply in the second half of the session. 605. He shorted at 610. Wow, Karthik, there'll be very few people who would have shorted Biocon yesterday, so congratulations to you. Sameet, what should be his target price?
No, I mean, ideally speaking, 580, 582 would have been the target. And, yesterday, if you see, the stock made a low somewhere around 577. And from there, we have already seen a sharp recovery. This is a high beta counter, so I would rather suggest him to keep a strict stop loss, and a strict stop loss somewhere around 618. That is today's high. If the stock manages to surpass this level, we could see a sharp bounce back in this counter. So keep a strict stop loss, and if the stock again comes back to say 585, 580, that would be an opportunity to cover your shorts.
Okay, so 580 is the level where you can look to cover your shorts, and please do not forget to put that all-important stop loss of 618. That's the level which Sameet is advising. Okay. Besides Biocon, I think now we've got a caller. Gagan Sharma calls us from New Delhi. Hi, Gagan. Good afternoon, and thanks a lot for calling us. Tell us what's your query on.
Yeah, hi, good afternoon. Actually, I bought, 70 shares of HDFC Bank at 2100 and 30 shares of Maruti at 8700 with a perspective of 5 years.
Okay.
So, what kind of, CAGR I can expect from these two stocks in coming 5 to 7 year horizon?
Okay, Gagan, let me tell you, you've bought the safe stocks, or rather the companies which have been performing pretty well. You have good time horizon of next 5 years. And Mr. Chokkalingam, HDFC Bank, if I have to look at the CAGR for last 10 years, they've not disappointed. For next 5 years, it's a safe bet. What would you advise him?
I think he has done the right thing. Being a retail investor and choosing these two stocks. I'm pretty confident Maruti will reach 5 million cars in the next 3-4 years.
Okay.
And I'm also pretty confident that HDFC Bank will grow 15 to 18% annually its profit, at least for the next 5 years.
Okay,
so
not bad.
These are the two stocks. He should hold on to them.
Okay, and what sort of levels do you see on them if one were to hold it for the next 5 years?
See, when you talk about 5 years return for any individual stock, particularly large cap, you should also have a view on the markets and the economy.
Right.
I am not that confident for 5 years of this market and economy growing in a linear fashion. So
would you suggest, if you have a number in mind, let's say if I bought it 2050, if it reaches,
return possible,
one should look to exit then?
No, it depends on the perspective.
Okay.
Because a lot of middle class investors, they get into 100% mid cap and then they see 50% erosion in the capital. So if somebody wants to be defensive in the portfolio, they should be there in the portfolio forever.
All right, fair enough.
So, and you can expect 15% return if market and economy are in a linear fashion.
Okay, so that's the minimum return you're saying,
yes,
right, on both these stocks. Okay, Gagan, congratulations then. You've selected the right stocks for you. If you want to hold on for the next 5 years, Mr. Chokkalingam is sounding pretty confident. Minimum, at least, you can expect 15% return from these good quality stocks, which have been giving you good CAGR return in the last few years. All right, the next query, I think, was in Greaves Cotton. Rahul on YouTube YouTube is asking if he should book losses for this position. He's bought 1,000 shares at 140 price, and right now it is 125. Sameet, I'll come to you. It's doing well today, but it has corrected from Rahul's buy price of 140. What do you think? Should he book losses or he should wait it out?
See, as of now, hold on. The stock is rebounding from its important support level of 120. In case if this bounce back extend further, then 130 to 133, these are the next levels to watch out for. If you see some kind of selling pressure around those levels, then exit. But once this stock surpasses 133 and sustains above that, then you could see a decent move towards 144 or 146 also.
Okay, so hold on. Don't just book your losses right now is the advice coming in from Sameet for Grief Scotland. Mr. Chokkalingam, do you track HPL Power?
Oh, I cannot talk on the stock for a compliance reason.
Okay, no problem. I'm going to take the next query from Facebook then. Amya Mudkal writes to us and he wants some commentary on Dixon Technologies. He's bought at 3679 and he's asking if he should buy more on dips. He does have a long-term views. 3679, this too has slipped to levels of 3200. What would you advise him to do?
I will not hold this company. It's a contract manufacturing. And look at Whirlpool. It has got 1,000 crore cash on the book. It got a solid brand on its own. Okay. Whereas Dixon supplies to other branded players, but it is trading at a huge premium to Whirlpool. Yeah. So for anybody who follows value investing cannot digest this kind of dichotomy. So I will not hold the stock.
Okay, and the reason solely is the premium valuation?
It's not justifiable. For contract manufacturing, and you have 5 people accounting for a large chunk, and tomorrow somebody else cuts the price and gives, this
it's very competitive.
4-digit price can come to 3-digit also. I'm not forecasting it, but this kind of potential risk is there. Okay,
so there's a potential risk if you're looking to invest into Dixon Technologies. That's what Mr. Chokkalingam feels. The PSU banking lot, remember I highlighted the Nifty PSU banking index as your top sectoral gainer for the day, and we've got a query coming in on Bank of India. Can we just pull up that stock in the meanwhile? Karthik SP on Facebook is he wants some view on this particular stock. So since he's not mentioned whether it's short term or long term, I'll take this query to Sameet. It's trading with gains of 2.3%. Would you suggest taking any fresh position here?
See, overall, if you see, this stock has been consolidating since last 1.5 months, and there's a range, defined range now, wherein on the higher side, whenever the stock approaches 148, 150, you tend to see some kind of profit booking, and on the low side, whenever it comes around 125, you see some kind of buying interest. So as a trader, I would rather look to play this range, wherein on the lower side around 125, 126, I'll go long by keeping a strict stop loss below this, and I would expect a decent bounce back. And higher level around 150, 148, I would book out my long. But if I have to take slightly broader view, then first this stock has to surpass 150 on a sustainable basis. If that happens, then yes, you could see this stock heading much higher. But as of now, I can see this range, and this can continue for a while also.
Okay, that's the view in Bank of India, sorry. The next question actually is in Bank Nifty. So Sameet, I'm going to come back to you. Sumit on YouTube is asking what's the view in Bank Nifty for the weekly expiry tomorrow, which is lined up, and he's also asking if why are the FIs selling? Sumit, well, I've been tracking the FI data both on the cash and the futures and options side. Clearly, in the last 3 to 4 sessions, at least since the start of June series, FIs have been creating short positions on both index futures. In fact, they're net short on index futures for the series, and also on the call short and the put long. A lot of contracts have been added. Why they're doing that, I don't know that, but I'll take your question on Bank Nifty to Sameet. Sameet, for tomorrow's expiry, weekly expiry, is there any trade that you can suggest on Bank Nifty?
See, first of all, even I don't know why they are shorting it. But we have to follow them at times. As of now, if you look at the overall structure of Bank Nifty, 25,980 has become a make or break level, at least in the near term. So if Bank Nifty breaks and sustain those levels, we could see a decent correction, at least in the near term. So those who have long positions in Bank Nifty, they should keep strict stop losses below 25,980, and as a trader, if you want to go short, that is the level to watch out for. You can go short below those levels also. As far as this strategy, this expiry is concerned, 26,350 we are seeing as a major resistance, at least for a while. So if Bank Nifty surpasses this level, we could see extension of this relief rally toward 26,500, 26,600. So as of now, for us, 26,350 would be a major level to watch out for, and beyond this, we could see extension of this move.
Okay, that's the view in Bank Nifty. Remember, it's come off today's high, and Bank Nifty will be volatile in today's session because we've got monetary policy also lined up at 2 p.m. and there was a sharp recovery seen in yesterday's trade in the second half of the session. It has bounced back from its 20-day moving average. Our next question is on Dwarikesh Sugar. Gopi Krishna is holding 5,500 shares at a price of 55. Just pull up that stock. He wants a long-term view, and his long-term is 5 to 10 years. So he's willing to hold on. The capital has been eroded by nearly 50%, Mr. Chokkalingam. There's news that a package of 8,000 crore could be announced for the sugar sector, but is that it? Even if it is announced, do you think the stocks can move higher?
Before talking about stock, I want to tell him that never have 5 to 10 year view for commodity business like sugar, which is politically more sensitive apart from the cyclical nature of the commodity business. And coming to Dwarikesh Sugar, since he is losing money and he can hold for 2 years, I don't expect the fundamentals of sugar companies to change in the next 12 to 18 months. Because when the crushing season starts in October, again you will see huge supply of sugar coming to the market.
The sad part is, Mr. Chokkalingam, a lot of retail investors are quite stuck in this sector for the longest time.
Yeah, you have to blame them only because they start liking anything keeps moving up. So they look at the price, not the denominator, which is the fundamentals. So this sugar cycle is, you know, for the last 50 years, it used to be 3-year cycle. Sometimes it becomes 6-year cycle. So one should buy sugar stocks even now, you know, after June, September results, when they start bleeding more, that is a time to buy, not at the peak of the cycle. So if retail investors get this strategy of buying at the bottom of the cycle, it can create a phenomenal wealth. Otherwise, it will destroy wealth. You can hold for 2 years. I am sure in 2 years, it will definitely bounce back.
It's very pertinent. Then you're suggesting to keep churning your portfolio every 2-3 years?
Sugar, yes. Otherwise, you see Dwarikesh Sugar, it has moved 20-fold. In a short span of time.
Yes, it has.
Yeah, and it corrected, if my memory is right, more than 70-80% in a short span of time.
I think one of the big investors bought into it, and after that was the time that the rally
I always
started.
tell people, you know, touch the big investors' feet and get the gyan. Don't follow at the peak.
Okay, that's the view on the sugar space, and we're running out of time. I would like to thank all our viewers for tuning in today and writing in your queries to us. And I also want to thank our guests, Sameet and Chokkalingam, for helping our viewers with their queries. Well, that's all that we have on this edition of Ask BQ. But remember, we're just a tweet, post, or a call away. So please keep your queries coming, and we promise to address all of them through our shows. In fact, you can log on to BloombergQuint.com, search for hashtag AskBQ, and get answers to all the queries that were discussed on the show today. Power Lunch is up next, so keep watching Bloomberg Quint.